Welcome to The Explainer. We're actually going to throw the usual agenda out the window today because we need to jump straight into what is unequivocally the most unprecedented pre-IPO wealth event in the entire history of technology. If you really want to understand the modern AI boom, you can't just look at the models. You've got to look at the money. Okay, let's dive into this. In a single month, we're talking October 2025, more than 600 OpenAI employees participated in a tender offer, cashing out a staggering $6.6 billion in stock. To put that into perspective, that is an average payout of $11 million per person. And remember, this wasn't an IPO. It wasn't some massive acquisition. It was a private cash out based on a jaw-dropping $500 billion valuation. But here is the massive paradox that we really have to wrap our heads around. This historic, totally record-breaking payout happened at a company that is bleeding cash at an industrial scale. I mean, by their own internal forecasts, OpenAI is projected to lose around $74 billion in operating costs by 2028, and they aren't even expected to turn a profit until 2030.
So that brings us to Section 1, the $6.6 billion paradox, a truly historic wealth event.
Now, what's really interesting about this slide is that this isn't just a story about big numbers. Actually, it's about how staggeringly concentrated this wealth actually is, even within the winner circle itself. Out of the 600-plus participants, just 75 people hit the newly tripled maximum cap of $30 million per person. Think about that. That tiny cohort of 75 people alone walked away with roughly $2.25 billion. The rest of the 525 employees took home the remaining $4.35 billion. And frankly, these numbers are completely defying financial gravity. This one single tender offer accounted for 6.2% of every single dollar traded on the entire U.S. secondary stock market in 2025. Employees who got shares 7 years ago have watched them appreciate 100-fold. Yet in just the first half of 2025 alone, the company posted a $13.5 billion net loss. And analysts? Well, they're estimating a $207 billion funding shortfall just for OpenAI to execute their current business plan.
Moving on to Section 2, an unprecedented tech windfall. Let's look at some historical comparisons.
To really grasp how wild this is, we have to look at the tech giants that came before. Notice the pattern here. Microsoft's 1986 IPO created an estimated 12,000 millionaires. Google in 2004 minted around 1,000. Facebook in 2012 minted thousands more. But here's the kicker. All of those happen in public markets with full disclosure over years at companies that were already generating real, tangible profits. OpenAI, on the other hand, minted its centimillionaires using private capital from investors who are simply desperate for AI exposure, with zero profits and absolutely no public market price discovery.
All right, Section 3, the retention arms race and the absolute fight for talent.
So why did this happen? Well, the truth is, this wasn't some generous reward for past performance. No, it was a desperate retention bribe. Let's walk through the mechanics here. Step 1, competitors like Meta and Google started waving massive, blank check-style offers at top AI researchers. We're talking single-person packages reportedly worth up to $300 million over 4 years. Step 2, for Stop the Bleeding, OpenAI scrapped its 6-month equity vesting cliffs and tripled the amount employees were allowed to sell in the secondary market, pushing the cap to $30 million. And finally, Step 3, employees cashed out their 6.6 billion NFTs. And astonishingly, investors still wanted more. There was $4 billion in unfulfilled investor demand left on the table. OpenAI literally had to make staying far more lucrative than leaving.
Which brings us to this little memo sent by CEO Sam Altman in August 2025 declaring, quote, "Missionaries will beat mercenaries." Now, you've got to admit the timing is pretty notable. This call for missionaries was almost immediately followed by massive one-time cash bonuses and the lifting of those equity caps, just so the company could fight off rivals.
And despite all those efforts to keep people, we are literally witnessing the birth of the OpenAI mafia. This tender offer basically acted as seed capital. Mira Murati left to start Thinking Machines Lab, which became a unicorn in months. Ilya Sutskever founded Safe Superintelligence, which was valued at $32 billion before they even launched a product. Liam Valutis started Periodic Labs, raising $100 million directly from OpenAI itself. At least 18 notable startups have been founded by alumni who cashed out, started a competitor, and then raised money from the exact same investors. It's like wealth creation through recursion.
Let's zoom out a bit for Section 4, the hollowing out effect, and the societal ripples of all this cash.
So the crucial point here is that this wealth boom is causing severe economic ripple effects well outside of Silicon Valley. An OpenAI researcher's starting salary is between $700,000 and $900,000. Meanwhile, the average U.S. teacher salary is about $74,000. To put that into perspective, one single $11 million OpenAI tender check is equal to 148 years of an average U.S. teacher's pay. Economists are warning that this is causing a structural brain drain because universities simply cannot compete to keep tenured AI faculty or PhD candidates anymore.
And the collateral damage extends right into the broader economy. In the first 5 months of 2025, U.S. white-collar job cuts jumped 80%, with AI directly cited by CEOs as a key driver. Meanwhile, these lottery winner economics are exploding locally in San Francisco. Pending home sales shot up 17% against a totally flat national average. A $42 million mansion on Billionaires Row just sold. Year-over-year rents are up 5.1%. The exact technology threatening millions of white-collar jobs across the country is simultaneously making the city unaffordable for the nurses and teachers who actually live there.
Now check this out. In April 2026, OpenAI published an economic policy paper acknowledging this exact dynamic. They wrote, quote, "Avoiding a concentration of wealth and control requires structural reforms." And they even advocated for robot taxes and shifting the tax burden from labor over to capital. The diagnosis is spot on, but man, it creates a stark contrast. Given this argument is coming from a company that just handed 600 people an average of $11 million each, all before generating a single dollar of net income. And this behavior really aligns with a quieter but totally monumental corporate shift. In its 2025 IRS Form 990, OpenAI actually scrubbed the word safely right out of its mission statement. They converted their for-profit subsidiary into a public benefit corporation and just eliminated their original profit cap entirely. The 2015 nonprofit that was originally created to benefit all humanity has, well, evolved into a corporate juggernaut heavily focused on commercial momentum.
Which brings us to our final segment, Section 5, a $1 trillion bubble. Let's look at the sustainability risk.
We have to ask, is an $852 billion valuation actually sustainable? Major financial entities are starting to sound the alarm on this. The Bank of England, the IMF, and JP Morgan's Jamie Dimon have all used the word bubble pretty recently. Just look at the indicators. The Shiller PE for the US market crossed 40, matching the dot-com peak. The Magnificent 7 tech stocks now represent 35% of the S&P 500, again, matching the dot-com peak. And AI capital spending by tech giants is projected to exceed 1.6% of U.S. GDP in 2026. That is literally a larger share of the economy than the Manhattan Project or the interstate highway system.
And this brilliantly illustrates the fundamental risk to that valuation, which all comes down to unit economics. OpenAI spends well over $100 million to train a model. But in early 2025, China's DeepSeek released a comparable reasoning model that cost a reported $5.9 million to train. When the market realized that AI inference costs might commoditize, it erased $600 billion off NVIDIA's market cap in a single day. If intelligence becomes cheap, OpenAI's valuation is resting on very, very shaky ground. So what should you take away from all this? Forget the daily secondary market prices. Watch these 3 specific tripwires over the next year. Number 1, watch OpenAI's 2026 IPO timing. If it slips past mid-2026, it means they're struggling to find a public valuation they can actually defend. Number 2, watch the Anthropic tender outcomes to see if employee holding patterns start to shift. And number 3, probably the biggest one, watch the capital spending from the hyperscalers, Microsoft, Amazon, Meta, Alphabet. If they pull back their AI spending, the entire foundation of this boom could crack. We are absolutely standing at a crossroads. A private, unprofitable company just executed the greatest wealth transfer to rank-and-file employees in tech history, against the backdrop of job displacement and skyrocketing infrastructure costs. So I'll leave you with this to chew on. Are we looking at the foundational funding of the future of human innovation, or are we witnessing the absolute peak of the biggest financial bubble in history? Keep your eyes on those tripwires. Thanks for joining me on this explainer, and as always, keep learning.